Welcome to the Bulletproof Cashflow podcast, the go-to place to gain financial freedom through real estate investing. Here we interview investors, mentors, and entrepreneurs who share their secrets and advice to help you build passive income. Let's get into the show.
Hey everyone, it's Agostino. One of the key relationships you need when you're building out your multifamily team is to have a great lender. Well, a good lender, even a great lender, will line up the best financing for your deal and really support you in case things get a little messy with that deal. So it's a really key aspect. Well, today's guest, he understands this critical role to investors. With this premise in mind, he started Members First Federal Credit Union's business lending program as like one person at a desk. He started from scratch back in 2002, and that business grew to be one of the top 10 in the nation. So today, he serves as CEO of MBFS, a credit union specializing in real estate investment lending and small business lending. His primary role at MBFS is leading the company efforts to assist credit unions in making commercial loans and helping investors find the financing need to take down those deals. So with all that, I'd like to welcome Mark Ritter to the show. Hey, Mark, thanks for coming on, man. Appreciate it.
Thank you for having me. Thank you for the invitation. Looking forward to it.
Yeah, it's going to be awesome. Well, if you like what Mark has to say, you can reach him via his website at mbfs.org. And if you like our content, please don't forget to leave a comment and rate the show. And finally, if you text the word freedom to 202-410-4202, you can receive our free ebook, The Bulletproof Guide to Finding a Broker. All right, Mark, give the listeners a bit of a history about how you got your start in all this.
Sure. Way back in, as you mentioned, in 2002, I got a job working with a credit union in central Pennsylvania to start up a business lending program. And at that time, credit union involvement in commercial lending was virtually non-existent. Our own people didn't know we did it. But we had a whole bunch of customers who had businesses, had real estate investments, but just couldn't match up with their credit unions. So we started it there and we pounded it out and grew it to one of the top 10 in the country, and really was able to help small deals, big deals, and everybody in between. And then from there, I set back in 2012, I joined up with MBFS, which is a credit union service organization. So I'm the CEO of a company that's owned by credit unions for credit unions. And now, instead of just working with one credit union, I work with over 70 credit unions, putting together real estate investment deals. And we do really small deals for those first-time investors, up to deals 20, 25 million plus for large scale projects in the major metro areas and everything in between.
Awesome. So, and we talked about this a little in the green room. So basically your group is acting like the broker, essentially, like a lender broker. They bring the deal to you, and then you're going to pitch it to whoever the credit union is, and see which one would want to compete on that deal, and throw down a couple term sheets and figure out which one you want to go with, right?
Exactly. And we also help the credit unions we're essentially the back office for the credit unions, and we're that relationship point for the real estate investor, where we help the credit unions underwrite the deals. We do all their loan servicing. We do we help them lead them to the best path. And we also help syndicate and participate the deals on the back end for the lenders. A lot of credit unions are small institutions, but we help them put together large deals well beyond what you think they would normally get into.
Right. I think you talked about this. It was like 25 million is the top end, or is it even more than that?
Yeah, we tend to stay, there are some credit unions get larger at our group. We try to stay in that 25 million and under. That being said, we also do $100,000 real estate investments deals, and everything in between. And it really, when you work with such a large group of financial institutions, from bigger, medium, and little, we have deals and opportunities for everybody along the food chain. Yes.
Well, and I think that for many people that are starting out, for those smaller deals, like say $300,000, $400,000, $500,000, going to their local bank is not always the best choice, right? They usually get higher rates. The customer service is usually not bad, but I think it's really the rates that are really the cost of the money is really the most expensive part of it. And most people don't even think about going to a credit union. That's the thing. I mean, it's not even within the realm of possibilities. So maybe to talk a little bit about that. Like how does your group fix that problem?
Well, our hardest challenge is everybody likes their credit union. People love going to their local credit union and getting their auto loan or their mortgages, or maybe they've had a relationship with them for years. Nobody's protesting on the streets against their local credit unions. It's always a very friendly institution. And a third of Americans actually belong to credit unions. So many people have these, but they don't think to make that leap to go to the credit union for their real estate investment needs that they have. And what a credit union is, for those on the audience who aren't quite sure, it's really just a cooperative-based community financial institution. Really, when you look in, it might have some of the same checking accounts and auto loans and investment loans and investment opportunities, but it's really just a cooperative institution run for its members by a board of directors elected by the membership. So what you have is everybody wants to go in and have that personal relationship with their local lender and be able to talk through deals. And it's nice to go meet the president or the senior executives. People have that opportunity with the credit union. All those types of that relationship-based transaction that you're looking for as you're starting out, and maybe when you're involved and somebody who can grow you along. That's that credit union opportunity that people have been looking for, but many times they just don't think about that as an option.
Yeah, I think that mainly because, at least the days of old anyway, you have to be like a member of these credit unions, right? So I think it's almost like an era of exclusivity. So people don't even think about going to the credit union for that reason, right?
Exactly. And it used to be, I can think of when my father, he had a credit union for the union that he belonged to, and for his factory, and there would be the teachers' credit union. Now, credit union membership has really opened up, where most of the credit unions you drive past, you still have to open an account and become a member. But if you really wanted to, I would bet 9 out of 10 you could go in and open an account at that if you really would like to. Right. So that's the nice piece. And credit unions as an industry also work cooperatively together. So maybe the credit union you belong to is only a $150, $200 million institution. Well, that's not a lot of lending capacity. What we do is basically bring the credit union industry together. So all these credit unions have lending capacity well beyond what they would have individually.
Okay, well, let's walk through a flow then. So let's say, for instance, we have a small deal, say $500,000 deal, right? Banks don't usually like doing those, and for sure, lender brokers don't like doing those either, that typically do the lending side of things, right? So they could be able to come to you and they say, hey, Mark, listen, I have this deal here. It's a smaller deal, $500,000. What can you do with something like this? What is your typical, these days anyway, what is your typical deal might look like?
Yeah, and for a $500,000 at a credit union, the average loan at a credit union is $350,000 for the commercial loan. So you'll get an audience who'll be able to walk through the deal. We're a federally regulated institution, so we have to make loans to people that we can show reasonably pay it back. It's not the subprime market and things like that. But they're very friendly in terms of, tell me the story about this loan, what you're looking for, but also what you're looking for in the future. Our rates are very competitive. Our terms are very competitive. Credit unions are very friendly when it comes to fees. One of the features that we like is our credit unions never charge a prepayment penalty on loans.
Yeah.
So maybe you want the flexibility to adjust and modify as these properties go along, because you're only going to be in a couple years. Well, you have that in the credit union space. but we're very friendly. You know, most of them, you look at 5-year fixed rates at a pretty low fixed rate, amortizations 20, 25 years. A newer property will look at 30 years. And really from there, it kind of looks like any other a bank loan, except a lot, you know, the process is very friendly and the terms are very friendly. And it's much more of that relationship-based transaction that maybe you don't get through an online lender or a hard money lender, or even some of the large banks.
Now let's take it the other side of the coin. Then we have a larger deal, say a $5 million deal, okay, yep. And we need to bridge that larger deal because the occupancy is sitting at about 82%. So we have to go in, we've got to do some value add to it, and maybe refi in a year or something like that. Can you do those types of scenarios as well?
Sure. We've done a lot of acquisition loans for multifamily with the renovations. So and while they were getting ramped up, and maybe there's an interest only period until the occupancy, it's a stabilized property and it's building towards it. It's in an area that it looks good. Maybe it's an older property where we're renovating all the units. We've done a lot of deals like that, and more in especially kind of those major metro areas where you're seeing more of that gentrification to the older units becoming nice, new, friendly units.
So now what's the difference then? Why should anybody go through you versus going through their friendly broker that might have just called on them or got hit up on LinkedIn like 8 times like I usually do?
Sure. One of the things is you have to remember we're owned by the credit unions for credit unions. So we really don't consider ourselves a broker. We're just a way, instead of shopping 50 credit unions, we're a way to aggregate that where you can have a one-stop. You know, it would be, we're almost like if your broker was owned by the banks. That's a nice way to think about us. Just so we cut out those brokerage fees that you may pay, because really we're just trying to connect the credit union and the real estate investor. So that's how we make money. You know, being that we're owned by credit unions, when they make loans, they're happy, and my owners aren't happy, and my clients are happy, which are the credit unions and the real estate investors. So we can really help reduce those transactional costs by being an aggregator and simplifying the process for people to reach the credit union industry for their commercial real estate investment.
Excellent. So really then, so what's the upside then, aside from what you just said, that you know, is there any other upside in terms of like fees? I know, because typically when you're working with a lender broker that's brokering to the banks, you have a fee, you have like a broker fee, that kind of thing.
The only thing, yeah, the only thing you're really going to pay is what you would normally pay to the credit union. And that's it. You're not going to pay a separate brokerage fee or a fee for our services. You know, we're paid by the credit unions themselves and not the borrowers for putting together the deals. So because, you know, we're working directly for the lender and we're owned by the lenders. So it cuts out a lot of the middleman and those brokerages fees in putting together those transactions.
Awesome. No, I think that many people can get a lot of good benefit from doing this. You know, it's just amazing.
Yeah, and we also realize, you know, there's over 5,000 credit unions in America. That's a lot of lenders to shop. We have relationships all up and throughout the East Coast and we also have relationships with other companies like ourselves throughout the country, where maybe you have a deal in Montana where I don't have credit unions directly, but I have other companies like us we have friendly relationships with. We just simply hand those transactions and try to match you up with a local credit union in your marketplace.
Okay. So now what if there's a case where the broker can't find a lender? So I'll give an example. So there typically, whenever a lender, you engage them, they go to a bunch of banks and to do a deal. The deal is fine, but there's some other issue or whatever. The lender just picked the wrong bank. So you have to get into a hard money scenario, and just to get it over the line, then you're going to refinance out of that. So very complicated type scenario. Would the same thing ever happen with you guys? Like, what if somebody doesn't want to do the deal? Like, how fast would you be able to find that out? And if they do renege right at the end, how are you able to remedy it to get it closed, or can you?
Yeah, well, we also, when we're moving forward, we're moving forward with a commitment from the actual lender themselves. We don't have coverage in 100% of every small market in America, but we have a lot of coverage in our credit union network and different credit unions that may cover a marketplace. And what we really do is, if we're going to say no, we want it to be a fast no, and here's why. And if somebody has to go with that hard money mezzanine, bridge type financing where they're paying a little bit and just to get it done because they only have a week to close, we regularly will work on the takeout and financing of those as well.
Okay, yeah. I mean, that's huge right there. Whenever you're getting a new lender relationship, you got to make sure they can perform.
Exactly.
That's my biggest thing. And you know they're going to perform. Like I said, a fast no is super, super important. And if they can't do it for whatever reason, they can come back in with someone else, a hard money guy, anyone that can get it closed, get it shut down, and then refi out of it when things calm down. So absolutely, that stuff is huge, huge. Yeah.
So yeah, I like to think of us as, kind of that community bank feel, but with scale.
Excellent. All right. Good. So, but like you said, I think you said something that really caught my attention. You may not operate in every single market, but you have a wide range as to where you can go, right?
Yes. And one of the things is, remember I said about credit unions, when you look under the covers, it's really a cooperative financial institution. They are driven for their members, by their members, and they're really a cooperative industry among each other. So all the time, pretty regularly, we get transactions from other credit unions where they have somebody who's interested in a deal in our marketplace, and vice versa, where we call up a credit union in Albuquerque, New Mexico, and say, we have somebody who has a lender. We know you lend in this area. Let's have that friendly handoff to that and get the deal done for the people. So when you get a bunch of banks in a room, they tend not to want to talk to each other, and everybody hides from each other and doesn't tell each other what's going on. And credit unions are the exact opposite. We're a cooperative business, being that, we share back offices, we share credit analysis, we do credit services collectively, we service loans collectively, and credit unions will share information with each other all the time. And they'll also share business to help out another credit union or somebody who's interested in getting financing from a credit union. So, if we don't have coverage, I got friends all over the place. We have credit unions all over the place, where if you enjoy your credit union relationship, and like I said, a third of the people, if not more, have those relationships already. Well, let's connect you with somebody in that marketplace who does it, so we can get it done in the financing you need from your local friendly institution.
Excellent. That's awesome. Now, as far as the markets that you're attacking, there's certain lenders I talk to, they love certain markets. They're honing in on places like Texas or Orlando or even Cleveland. Is the same thing happening on your neck of the woods too? Like, are they like targeting certain cities? Are they looking for assets and really put money into certain areas?
The hot markets are the hot markets, and we have credit unions in all of those, just like everybody else. What's nice about us is credit unions also are almost mission-based lenders, where they're not looking to necessarily hop into the hot market. They want to serve the community. So credit unions tend not to hop in and out of businesses and opportunities like maybe some of the banks. And they don't say, Atlanta, Georgia is booming. We're going to be in Atlanta, but we're not in another small town. We have lenders in Philadelphia and New York and Washington, D.C. and Pittsburgh and in the South and all these other kind of hot markets. But we also have lenders in Scranton, Pennsylvania, who will be more than happy if that's your market and that's your need, who will help you out in these smaller markets and smaller tiers where some lenders may want to follow just the hot markets. We also have a lot of people in the secondary and tertiary markets to help out the real estate investors who maybe that's where you live and that's where your opportunities are and that's where and we can look to help you out in where you're at.
Well, I was just going to say, it seems to me like, I'm not going to say it's going to sound terrible, but it's like less opportunistic, but more, like you said, community driven as opposed to a bank. They're looking to maximize returns. Not a bad thing. It's just two different models. That's just what it is, right?
It's exactly the scenario.
Yeah.
We have, as I said, we're a federally regulated financial institution. We have to make money, but we can also do it without scraping every last nickel we can out of the business or following hot markets or being in and out of businesses. On this year we're lending, this year we're not. This year we lend in Scranton, next year we don't. So credit unions you'll see as more consistent lenders in the spaces that they operate.
Yes. Well, I think it's also worth noting too, something that caught my ear as well, secondary and tertiary markets. Some lenders, like big bank lenders, even smaller bank lenders, don't like those markets. They prefer to stay away from those and just stick to the primary and secondary. They'll never go to the tertiary. It's very tough.
And we see it as, we have members there, credit unions have members there, people need financing there, businesses need financing there, and you need the support. And it's good for those communities. And I understand why the top few banks won't do that and draw the circles. We're going to focus on these markets. But there's a lot of people who live in the smaller markets and people that need financing. And I think credit unions are a great opportunity to fill in those gaps.
Absolutely. No, I love it. So now what do you see the next 5 years looking like for your business then?
We really see the growth and we see consolidation. We are continually looking to build economies of scale. Credit union business lending as a whole is growing by an average of 18 to 20% a year.
Wow.
So my ideal world 5 years from now is I don't have to go out and spread the message of, hey, check out your credit union. We want it to be normal, everyday business. And that's the message that we want to spread. Everybody knows, you could go to a credit union and get a car loan. You could get a checking account. Everybody knows you can do that. They don't know you can have this. And that's really what we're focusing on, is spreading that message and continuing to grow the business of the credit union space.
Yeah. And now, but the thing is though, is that it's still as stringent as far as your underwriting is still as stringent as a regular lender too, right?
Well, good credit's good credit. We'll listen to the story a bit more. As we really try to say we don't lend in a box. We lend. We have to show you that you can pay us back, obviously. But we're not. If you have a story to tell makes sense on what happened a few years ago, we will have that narrative piece that goes along with it, and it goes a long way.
Got it. Awesome. No, that's good stuff. This is excellent. Excellent for those people that have a smaller deal, especially, but not limited to the small deals, also for the large deals as well. It's good stuff. If you want to reach out to Mark, you reach him via his company website at mbfs.org. I'm also going to include his email in the description too, so you can message him directly. I hope you got a lot of good insight on leveraging credit union financing for your commercial loan. Thanks for your time, man. Greatly appreciate it.
Thank you very much. I enjoyed the talk.
Thank you for listening. We hope you enjoyed the Bulletproof Cashflow podcast.